Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles, and today I'm joined by Paul. Good morning, Paul. How are you?
I'm doing great. Doing fine.
Glad to hear it. All right, well, let me jump right into some TA real quick, talk about what I'm seeing in the charts this morning, and then we will chat and hang out a bit. So, yesterday we were talking about the contract rollover. The contract rollover created this massive price difference between the old contract and the new contract. We are basically just ignoring it. I have rolled over to the new contract. I am trading the Z, so I no longer care about the U. All I'm focused on is the Z contract. Where is it? And I don't care about trying to differentiate where should it be compared to the U contract and so on and so forth. So the levels that I'm using are from the U contract, but I'm trading them on the Z, and I'm not going to make it more complicated than that because in the past, I have found it works the same. So if we're looking at the markets right now under that context, looking at the Z contract using the U contract levels, we are actually at a new all-time high right now. The overnight last night made a new all-time high. I am going to treat it like a new all-time high. All right, I'm going to treat it like this market has tons of momentum. It probably got itself overbought in the overnight last night and needs to cool off a little bit. But this market has momentum and it can just keep going higher. And we have blue skies above us. Okay, so the first order of business for the market this morning, let me get my drawing tool up and running. The first order of business for the market this morning is going to be to try to fill the gap. That is, try to get back down to yesterday's high around 57.03. Okay. If it is able to fill the gap, we will look for support around yesterday's high. Any support above the closing price, so any support above, we'll just call it 5,700, is bullish and likely to lead to the market turning around and going higher. The only thing that would get me bearish today is if we start to spend time and bring in volume inside yesterday's range. That will mean we need a pullback to start repairing weak references that we left behind, and we do something called monitoring for continuation. So if we get inside yesterday's range, we don't reverse, we start spending more time, we assume we have to go back for the first week reference. We assume we have to go back for 56.91. If we repair that, if we pass through that level and the market turns around, great. That's all we need to do is repair that first one, and then we're looking to continue higher. If not, if we repair that first one and get new selling, we're looking to repair the next and the next and the next all the way down to yesterday's low. Okay? To me, that is less likely to happen today. What is more likely is a continuation of the momentum to the upside. So that would be the market either can't fill the gap and it finds support somewhere above 5,700, or it comes down and finds support there and then turns around and heads back up.
So Charles, just
for it.
looking at the NQ, it looks like in the case with the NQ is that it's not at all-time highs. It's still quite a distance. Can you take a peek at that?
Yeah, let's do that. Yeah, the Q is a long way from its all-time highs.
Because I get excited about all-time highs because of the blue sky potential.
Yeah.
And here we've got it potentially in the ES, and we're just not there on NQ at all.
Yeah, let me just mark my chart. Okay. No, it's a great observation. So what does that mean for the NQ? The NQ is going to have to fight its way to get up there. It's got a lot of resistance between here and there that it's going to have to poke through. But I would say if the ES starts to act like all-time high ES, just pump it to the upside, the Q will follow suit and get up to its all-time high. You know, again, I can't pick how many days, but I would say within the next couple of weeks. But it's going to be about taking it one step at a time.
So NQ snobs such as myself always think that NQ is leading the market, leading ES. But in this case, you would see ES leading NQ if it's heading in, as it does all-time high territory.
Yeah, and it can also be like intraday, they kind of switch off. So it's funny how you can see sometimes like the ES will be kind of range bound. It'll be kind of chopping around, but the Q will have like tons of momentum up. And then later on in the day, the ES starts its momentum up and it kind of follows the Q up. But you can get exactly the opposite, where you have days where the ES is trending and the Q is just kind of bouncing around. And then the Q then follows the ES into that momentum. So looks like we lost your camera. I'll try to get you back here. There we go. So
no video. There I am.
Yeah. So basically, I would see it the same way in that daily context of like on a daily context, the market had a massive correction on the ES. We have retraced that correction. We are back at the all-time highs. So there's always one of two things that happen here. The market double tops, comes back down, and we need to spend more time going sideways, or the market breaks above and then we get the next leg to the upside. Okay. And so, yeah, I would say since the ES is there first, the NQ will follow in this particular case. I will say, just looking at the NQ on the daily chart, it just, with that contract rollover, it just poked through some serious downtrend resistance. So, yeah, I would say if the ES keeps the momentum going, the NQ is heading to its all-time high very soon from here.
That's exciting.
Yeah. So, yeah, as far as TA goes for today, I would describe the NQ exactly the same way that I described the ES. It's got a massive gap up. I would be looking for the market to either, find support somewhere in that gap. I would say like 19,780 or 19,733. Find support in there and continue higher. If not, fill the gap, getting back down to 19,700. And then I'd be looking for support at the previous day's high. I will just say yesterday's range, not as bullish on the NQ as it was on the ES. So the NQ is not quite as bullish, but it definitely has momentum up.
So I wanted to talk about the rollovers, though, and how that happens. I mean, I was thinking about it. Unless you wanted to jump to something else right now.
No, let's do it. Let's talk rollovers.
So, I actually was looking at this stuff back in the 90s and somewhat before even to a degree, but futures specifically in the 90s. And back then, the futures were actually traded, the forward contracts actually traded at a discount to present contracts. To your current contracts. So if the treasuries were running at 4%, was your risk-free rate was 4%, then the current contract would be about par with the underlying. The first quarter out would be about a 1% discount. The second quarter out would be a 2% discount. And the third quarter out might be a 4% discount, to where you could actually consider or contemplate buying 3 quarters out and earning the risk-free rate while the market caught up.
Yeah.
And the world has obviously just changed a lot since then, to where now it's looking like 1%. I don't know, I didn't measure it, but about a 1% jump when you roll over. And I guess the underlying demand there is always going to be that the options trade is allowing these guys to offset. They're offsetting their risk with with futures contracts, and there's a demand.
Yeah,
for these forward contracts.
That would be exactly my thesis as to what's going on. Is the liquidity used to be mostly in stocks, and futures were just kind of like a hedge and a way to kind of to take on more just a different type of risk with more. Yeah. Anyway, but what has happened now is the liquidity has shifted to options. Options is how the big players interact with the market now. And so they are hedging with options on futures, and like there's all this crazy activity happening. So yeah, I have a feeling it's all about that rollover of people wanting to take the positions they have on the U contract in the options on the future, not the future itself, but the options on the future. They want to take those and roll them over. And so because there's no liquidity in the actual futures contract yet, because everybody's still trading the U, it just creates these big spikes in price in what is the underlying asset for those options, the Z contract. I hope I made that as confusing as possible for everyone.
I'm pretty confused, but I was confused before. So
yeah, it's just a bizarre, weird thing. It was like, again, I feel like everything is always changing. A year ago, we would get little differences in price. We would get, it'd be 3 points higher or 5 points higher, maybe 10 points higher on a crazy rollover. But now the last three have all been like 30-point differences, 40-point differences, and it's just insane. So some mechanism has changed. Something.
Yep.
Let us know, chat. What do you think it is?
So next up, though, tomorrow is the day for interest rates. And it's monumental to see the Fed getting ready to cut interest rates. It's been a long time since they cut interest rates. And we'll see how that works. I mean, they're forecasting a 1/4 point tomorrow, but Reuters is telling me that the market's baking in a 2.5% cut over the course of the next by the end of 2025. So over the next 15 months or so.
Mm-hmm.
And 2.5% is just shattering in terms of what that does to residential mortgage rates. I mean, on a $500,000 mortgage, 2.5% is like $12,500. So it's $1,000 a month, and kind of free cash flow in the home and the household budgets that is not there today, that people are paying into their, paying to their mortgage.
Yeah.
And so you can expect, if they can get that size cut, then you'll see the world refinancing their mortgages 2% less and just really making out big time. And that'll create a virtuous cycle, or a cycle that'll heat up the economy to where the Fed stops doing it again.
But my question is, and I know that this is way more complicated than I'm making it out to be right now, but if the stock market's at an all-time high, jobs numbers are good, the economy seems to be healthy, the only thing people are upset about is inflation, but it's not stopping them from buying things. They're still buying just as many goods as they otherwise are. Complaining about prices, but they're not unable to purchase things. Why would they have to make such a big cut?
Well, that's over the course of 2.5 years.
Yeah.
I mean, over 15 months.
Yeah.
I mean, I'm really expecting, and everybody else is expecting, a 1/4 point tomorrow. I'm not, they had talked about a 0.5 point to start things rolling, but I'd be pretty surprised. But they basically build up ammunition for when they need to raise interest rates in the future. So it's kind of like they're banking it. So that at some point, if things get dire and they have trouble refinancing national debt or something like that, they can start pumping up interest rates. And the Europeans are kind of ahead. The ECB dropped a 1/4 point last week, which is kind of why the European markets themselves are hopping at the moment, because they're all happy. And they don't often get ahead of the U.S. on stuff like this. But I know the Swedes did it. The Japanese are outliers. They're slowly raising rates. But that's kind of what the Japanese people do, I suppose.
Well, what's scary about that, Paul, is what if the Fed says no change tomorrow?
Oh, the market will be disappointed.
The market is not going to be at all-time highs anymore, Paul.
No. What is it you call it? That you have a particular word for it. It will be it's adjusting the price, but you have a phrase. Not shitting its pants, but something like that. I mean, it'll drop.
Yeah,
and it'll be repricing, because the market's definitely priced in a cut. I mean, an interest rate cut right now.
Yeah, well, I mean, that makes sense. If everyone's convinced that there's going to be easing and the money printer's going to go burr, then they have no problem buying stocks at all-time highs.
Yep.
Because they know there'll be more money in the economy in the years ahead. Yep. But man, if that's what's priced in, and then Powell comes out tomorrow and says no change, fuckers. Market's not going to like that.
Yeah. No, but I honestly think they've been signaling for quite some time they've been signaling for 4 or 5 months that they were.
Getting close.
Since the beginning of the year, they've long since said we're not raising rates anymore. And for the past 4 or 5 months, they've been saying, "Yeah, you see that number, that makes us feel better."
Mm-hmm.
And then they'll come around a month later and the same thing. They'll feel better about other numbers.
Okay, well, fingers crossed.
Yeah,
let's get a cut, baby.
yeah. The only other thing I was going to mention, it looks like crude is turning around. It touched 70 yesterday, or it has this morning. I don't know what exactly to say. It's cut. It touched it, but the crude trade may be alive. It may be bouncing off the mid to low, the high to mid 60s, and heading for 75, 80. I don't know if you wanted to look at the.
Yeah, I'm looking at it right now. I think you're right. So let me pull up the chart real quick. Boom. So, yeah, I mean, there's your V shape. There's your low, right? We were waiting for it. We were waiting for that thing to finally catch the bid. So you had a short-term channel happening. You broke through that. You're now creating momentum on the daily, higher highs and higher lows. And we've got that larger sort of megaphone channel looking thing that we've been talking about in here. And the opposite end of that is this trend line down in the, like you said, 73 area. So, yeah, I'd say it looks bullish to me.
No.
I don't see any resistance until at least 72, or 71.50.
It's hard to say. Hard to say. I'm not much of an oil guy. I just know they do a lot of it.
Yeah. I just know this market isn't like the ES. You know what I mean? It doesn't start trending one way and then reverse and start trending the other and then reverse and start trending the other. It's like once it picks a direction, it goes. It goes for long periods of time one way and then long periods of time the other way and then long periods of time one way and long periods of time the other. It's not like 2 days this direction, 3 days this direction, 1 day this, it's like it goes, it finds the bid and then it reverses and it starts going. So it looks like it's going up.
Well, it's one thing that Houston has going for it. I mean, Chicagoland does all the commodities and the options markets, but Houston's definitely an oil town. And there have been a couple of times when I could feel, you had the feeling that, boy, the price got up high enough to where a lot of these oil companies sold their production forward in big chunks. And that makes the oil people really happy because it consolidates their future cash flows.
Yeah.
So you can see that happening here. It's been about 4 or 5 years, but when the market was down in the 10s and 20s, man, it was a day when it hit like 45, and you could just feel the market saying, we're selling forwards all over the place. Yeah. And that really saved the oil industry, at least those who got overextended.
You need to make friends with a stripper. Because when that happens, when they start locking in those future earnings and they start paying themselves huge bonuses, who's going to find out first is the ladies that work at the strip club.
So, Charles, why do you think I'm not friends with a stripper? Okay, let's go there.
I mean, first. You don't have to tell your wife. No one will know, Paul.
Okay.
I'm not saying hire her to perform for you. I'm just saying be friends.
Yeah, get stock tips or something like that.
Yeah, you're in the strip club with $1 bills. Like, I'm just looking for commodity advice.
Yeah. Yeah, that sounds a way to go.
Hey, man, it's an option. I'm just putting it out there. It's an option. If you live in a town like that, it's an option.
Yeah. Well, I've honestly told my kids, someone asked me what they should do if they wanted to get into the options business. And I said, move to Chicago and work at a bar.
Yeah.
Find the right bar and go to work in that bar, and you'll probably learn more about the options business working in that bar than you will any other way.
Yeah, it's such strange advice to give, but it is so true. You just got to find mentors. You got to find people that know what they're doing that'll let you in on it, And the bar is a great place.
Absolutely.
All right. Well, I don't have anything else to share. Do you, Paul?
Well, we've talked about strippers and bars, so that should get the day started.
Yeah, I mean, you guys came to the right place if that's what you wanted to hear about.
Yep. And oil, but, West Trade Intermediate, West Texas Intermediate. So, All right.
Actually,
Cool.
real quick, Paul, before we say goodbye, because there is a question here from the chat. In case I missed it, do you use the continuous contract? Do you back adjust, and why? I don't back adjust. I don't change anything. I roll over to the new contract, so I'm on the Z, and I just leave all my levels exactly the same as they were on the U and trade them exactly the same, and I don't change a thing. And I have found in the past that works, perfectly. So that's what I do.
The only thing I would say about that is that some programs like Tradeovate and things like that will automatically pick up prior contracts, and the utility of that is that you got the volume, so you see the contracts that are trading volume because they've been trading the December 2024 contract for a year and a half now,
Mm-hmm.
but the volume's been so spotty that it doesn't really correlate to what it's doing right now.
Mm-hmm.
So
yeah, and it can get confusing too for people. Like, sometimes your software will roll over. Sometimes it'll calculate the adjustment between the two. And it's like when you're seeing the one that's calculated, that is a derivative of real price, not real price. And I'm just a purist when it comes to price. I want to know the chart that I'm trading, what price level is it at right now? Like, that's what I care about. So yeah, that's why I keep it the way I do. But very cool.
cool.
All right, Paul. Thank you very much, sir. We'll see you next
Thank
time.
y'all.
Bye,
All right.
everyone.
Bye-bye.